Fitzgerald. This is Dubai Works, where we interview the business leaders making a difference in this great city.
That business with scalability was very interesting to me.
I like building something that has legacy.
So I wanted to bring someone on the show who knows a lot about Web3 and crypto. We haven't had a conversation on that in a while, but as regular listeners will know, we go into fintech quite a lot for two reasons. Firstly, there's a lot of entrepreneurs in the region who are doing a lot of interesting things in fintech and raising a lot of money and hiring a lot of people. So it's a really thriving area and a real hot part of startups in the Middle East and North Africa. And the second reason is that it's super complicated and there's many different elements to fintech, be it payment gateways, be it platforms, be it digital banks and crypto obviously as well. So this company are overseeing that. They're partially a bank, partially a wallet, and partially a trading platform as well. So do listen, enjoy the conversation. The first part of it is a lot about what FinVault is and how Christian and his co-founder set it up. It goes into a lot of detail on that and on what space they're in. But at the end, we do go into a lot more detail on Web3 and blockchain technology, and he's really an authoritative commentator on that space. He really knows what he's talking about, so it is worth listening to and enjoy the conversation. Welcome back to another episode of Dubai Works Business Podcast. This week we have a really exciting topic to explore with our guest, who is Christian Papathanasiou, the CTO of FinVault. So FinVault are a Web3 banking platform that gives individuals and businesses full control of their money and digital assets all in one secure vault. So Chris is the CTO. Prior to FinVault, Christian also held cybersecurity leadership roles with Kareem, now Uber Middle East, a company called Dark Matter, and City Global Markets. On the show today, we'll be discussing the story of FinVault, how the company came about, and Web3 as well, how it will transform the banking system for individuals. And then something that was in the news recently, Al Sheikh stud partners with FinVault to buy Arabian Horses NFTs, and then the future plans as well for the company. Good morning, Christian.
Good morning, Richard. Thank you for having me.
Thanks a lot for joining. So yeah, you're in a very buzzy space at the moment, your company. How did it all come about?
Sure. It started about in 2019 when I met my co-founder, Papathanasiou, who at the time was with a very large payments company in Bahrain called Paytabs. He was like the number 2 guy there. He was a COO. And we immediately clicked, decided that we would start something together, and that thing that we wanted to start together was effectively kind of like a service to provide SMEs with bank accounts. And over lots of like in the startup world, you tend to pivot quite often. Eventually, you hit the sweet spot. And that sweet spot for us was marrying kind of like SME banking, retail banking with the crypto world. And we're by no means a bank, but what we are and what we're building is effectively something that looks like your bank, feels like a bank, but leverages all the benefits of a very emerging technology called Web3 finance. And allows people to manage their crypto in kind of like an interface that looks very much like your bank. That's the best way I can explain it. We like to call it the Citibank of DeFi, and that's basically what we've built.
Amazing. So there's a lot of terms there that we can go into and describe, but just kind of taking a step back on 2 levels. Firstly, your experience and your partner's experience seems very good for this new world, right? There's cybersecurity there, there's payment gateways as well. Was it natural that you would do something in the fintech world, and had you always aspired to start up your own business as well?
Yeah, the aspiration to start our own business, both myself and my co-founder, has always been there for a very long time. We were always entrepreneurs at heart, and I would say throughout our careers we were intrapreneurs, meaning that we were innovating inside the companies that we were working for, taking ownership and kind of building like little autonomous little cool things inside. But the desire to start our own business was always there. And when we took the leap, we leveraged our combined experience, mine in the cybersecurity world. I've been in cybersecurity for about 15 years now, working for very large financial services organizations in the UK, like Citibank and Royal Bank of Scotland, and eventually in the UAE as well, which is what brought me to the UAE to work in cybersecurity. Initially for Dark Matter in Abu Dhabi, and then Kareem in Dubai. I was their head of cybersecurity, and right now. Fintechs are kind of like these emerging players, but at the same time, they need to be held to the same scrutiny and same regard and same barrier of entry as any other financial services institution, including the ones that are much more well capitalized and much more well and much larger. And cybersecurity plays a very pivotal role in all of that, right? So making sure that people's money and people's finances cannot be accessed by unauthorized third parties, giving the regulators all the right kind of assurances that we do all the right things internally, we have the right processes, the right governance, the right controls, is fundamentally important to building a very long-term sustainable business in the fintech space.
Absolutely.
Now, my co-founder, he's been in payments for pretty much his whole career. He started off with PayPal in India. He was the employee number 2 in PayPal when PayPal launched in India, and he was part of Checkout.com, the founding team of Checkout.com, which now has become a multi-billion-dollar company. I think he was working directly with the founders there, and eventually life brought him to Bahrain, where he met a gentleman called Abdulaziz Al Jouf, who founded Paytabs, and he joined Paytabs when it was literally a few people in an office, and then Paytabs grew into this huge company that's processing billions of dollars a year. And Punit played a substantial and fundamental role in that. Now he's got these incredible connections in the payments world. He brings that side of the equation that I didn't have initially, and I have the cybersecurity angle and the crypto angle, because I've been in crypto for pretty much its infancy when it first started. So together, our joint experiences have kind of like been brought together, and that's what we're building.
Amazing. So definitely amazing pedigree there and background, and I can see how the different skill sets can come together. So talk me back. So 2019, we're now in 2022. What is the company today? Is it consumer facing? And what have you built so far? And what stage of the journey are you on?
Sure. So the business hasn't officially launched, and we've taken kind of the slow route to build a lot of the Lego blocks that would build a long-term sustainable business. And those Lego blocks start off with getting the right regulations in place, getting the right licenses. And we've invested very heavily in getting the right licenses to operate as a business. And that involves getting licenses, crypto exchange licenses in various jurisdictions in Europe, like Estonia, Lithuania, and Poland. We have all of those. And also starting a slightly separate business, which is more of a payments business. It's not called FinVault. It's not FinVault, but it's a payments business in its own right in the UAE. Which will have, it doesn't have yet, it will have a money service business and the ability, money service business license and the ability to issue cards. So we've invested very heavily in getting all of those licenses and building that foundation layer. And then on top of that, we've now have a team of 15 people spread across Nigeria, the UAE, and India. We've identified that Nigeria has incredible tech talent. You know, that really? It's not somewhere that people would initially think about going, and I believe that's very fundamentally wrong. But it does give us the opportunity to identify and hire some extremely high caliber, extremely talented engineers, and we've hired quite substantially in that country.
Amazing.
And we're 15 people spread across these 3 countries. HQ is in Dubai, and we're building a product that will initially be launching in Europe and in the UK. And what it will allow people to do initially will be to very easily access the crypto world. We will be issuing bank accounts for people individually. So you could get your own crypto-enabled bank account, where as soon as you deposit funds into it, it will then allow you very easily to digitify those funds and convert them very easily into other cryptocurrencies that you may like to have. Or you can keep them. You can keep your funds in the account just like any other normal bank account. So you have the full flexibility. I keep my, I could have, my GBP, some euro, and then side by side, I could also have my Bitcoin, my Ethereum, my this, my that, and you can swap between all of them. You can also pay your bills. You could eventually buy flights and tickets and insurance and all of those things, but all under one roof. That's kind of what we're building. We believe that's very powerful. It's kind of lacking. It's not there yet. There's a lot of places where, there's lots of these trading platforms that you can buy cryptocurrencies in and things like that, but they're so hard to use. We believe making it simple and very easy and putting it in a format that people are used to, like a digital banking interface. Like a web banking makes it so much easy for people to access.
Amazing. So part modern finance bank, part trading platform, and part digital wallet, crypto wallet. Would that be fair to say?
That's if you distill it down, that's fair to say.
And so talk to me, because I think you mentioned something interesting that we often hear for startups is not just how difficult it is to open bank accounts, but financing, SMEs, things like that. It's not just an emerging market challenge, it's a global challenge. It's very hard for businesses to operate financially at the beginning. And that was one of the things that you looked to solve at the start. What caused the pivot, or why not pursue that? Or did the world, sort of the crypto world, naturally for you see like the way that this was going anyway?
Yeah, I mean, we're still looking to address that, but we're looking to address it in a slightly different way. We're looking to address it by offering slightly different accounts that operate on the blockchain. They're crypto-enabled bank accounts. So they work like a normal bank account, but instead of working on the Swift rails or whatever it may be, they work on the blockchain rails. We're still looking at that. It's still it is absolutely a pain point. Lots of businesses take months and sometimes years to open just simple bank accounts. It's a huge pain point, not only in this region, but also internationally. And it needs to be solved because ultimately it stifles innovation. It stifles, businesses kind of providing back by hiring, by growing, by exporting, by importing. These are all things that are bedrocks of an economy that ultimately boil down to require a fully functioning bank account. And ultimately, nations and economies suffer because this is not being well served. But even before we take it down to businesses wanting to open bank accounts, there's a massive problem not only in this region but in internationally where low paid workers are outside of the financial system. They suffer in getting operational bank accounts for their own needs, and that's an incredible problem because it stops, it prevents these individuals from a problem in this region and not only elsewhere is providing low cost workers with banking facilities, and this is a massive problem in this region, not only here but elsewhere as well. Effectively, by having a very high barrier of entry and not being able to bank these individuals, reduces kind of like their financial well-being, and there's lots of benefits to banking blue collar workers, so on and so forth, and that's right now a big problem that these people face. They're not able easily to remit money back home. They're not able to be banked. They're not able to get financing, so on and so forth. That's a massive opportunity we see, not only to benefit from it financially, but to do good in society. That's a very big thing that we're big on. Is actually how do we help people increase their financial well-being, and that's something we want to look at as a company.
Interesting. So 3 years in or so, and obviously it would have been bootstrapped or founder-led at the start, but did you raise funds? We see a lot of interest in the region on fintech. It seems to be the hot topic for investors in UAE, KSA, and in Egypt over the last 2 or 3 years. Was there interest of investors in FinVault, and how did you approach that?
There's been substantial interest from investors in FinVault, and there continues to be substantial interest in FinVault because people realize that we're in for the long game, and we're investing very heavily in licensing and all of these great things. We don't want to be a fly-by-night operation that raises lots of finance and then just disappears. However, up until now, we've been self-funded. We've taken that approach. We're really cautious about bringing the right investors on board. We want the right partners, and up until now, we have felt that taking the right investors on board would be the best thing to do. We haven't yet found those right partners. We are having some conversations with various interested parties. At the same time, we also believe that we'll be able to build a very sustainable and profitable business very, very quickly as soon as we launch. And we might take the decision to not take outside money. That might be a decision that we take, because in the end of the day, if you start taking outside money, you end up diluting your interest in the company. So we're considering not taking outside money at present, but we're still having some conversations.
Okay, very good. And talk to me a little bit about the choice of launching in Europe. It seems to me to be a more mature territory or region in terms of digital banking, in terms of how people have used what are known as digital banks over the years. Is that one of the factors that you looked at? Sometimes it's easier to enter a market that's a little bit more mature rather than something that's really in its infancy.
Yeah, absolutely. I mean, Europe and the UK have very well-defined parameters for entering these markets, which I won't say make it easy, but at least you know where you step, right? So you know it's a well-trodden path. You know that you know what you need to do in order to launch, and as an entrepreneur, that gives you kind of some good financial footing in order to get there. At the same time, you know, our headquarters are in the UAE. They are in Dubai. Dubai has made some great progress in releasing its very recent virtual assets regulation. The Dubai World Trade Center, that I believe that will provide a lot of transparency and clarity to a lot of entrepreneurs such as us, who are already in the UAE. The UAE is already our home and has been for many years, and will provide a lot of financial clarity to us in order to not financial, sorry, like regulatory clarity to us in order to also launch in this market. We're actively looking at it. We're actually speaking with various regulators and spending a lot of considerable effort in exploring those venues as well in this market.
Okay, amazing. So I guess where Web3 coincides, or the intersection between Web3 and the financial world, is obviously crypto. Start trying to understand for anyone the world of crypto in terms of what it means for them and how to get involved in it can be quite challenging because it's quite new and there's a lot to learn. But early pioneers in the space, such as yourself, would have understood it earlier on. How have you understood the intersection between Web3 and fintech personally, and then how have you brought that into FinVault as well?
Yeah, sure. That's a great question. So when I tried to use like a Web3 platform, I actually counted it. There were 13 steps involved between going from my bank account or my credit card to actually being able to access this Web3 product that I wanted to use. Let's say it's a sushi swap DEX or whatever it may be. I had to, fund my crypto exchange account. I had to buy some sort of token. I had to pay like 5% commission on that, then commission on the token I bought. Then I had to convert that token to the token that the DEX wanted to use by bridging it over. And then finally, many steps later, I could actually use this Web3 platform that I wanted to use. And overall, unless you're somebody like me that's really interested in doing this, it's too complicated, too hard, and oftentimes too expensive as well. We measured it. It ends up costing you like 10 to 12%, going from start to finish, from your bank account all the way to a Web3 protocol. And we felt that that's really not acceptable. We felt that it can be done much easier, can be done much swifter, much faster. And there's a whole bunch of benefits in this Web3 world that are not available in traditional finance. First of all, Web3 finance is governed by code, meaning that there's no people there telling the code what it should or should not be doing, and that's immensely powerful because it means that outside factors would never affect a Web3 financing platform. We're seeing different things all over the world where governments, for various reasons, are making various decisions on various policies that end up affecting individuals. These types of policies would not be able to be applied in a Web3 world. So it gives a certain element of autonomous and self-governance to money, and financial protection as well. You know, in a traditional banking system, you give $100 to a bank. Effectively, you become a creditor to the bank, even though that money belongs to you. You are, at the point of deposit, a creditor to the bank. That money technically is no longer yours. In a Web3 world, you are still in full control of those assets. At any point in time, you control the safety and security of those assets, and they at all times belong to you. That's immensely powerful.
Interesting. Yeah, go ahead.
Yeah. No, please.
Yeah. Okay. So that's very clear, and it's good to understand it in that sense, from a point of view of blockchain, and I guess the promise of blockchain in that individuals would be more empowered with their assets. But still, it's still complicated, right? It's still sort of very early, and it's still there's many things. You know, when we talk about wallets at the moment, they sound like simple things that can store assets, but how to use them is quite complicated. So how do you go about simplifying the process? You know, are you relying on faster chains, or are you relying on new innovations that you think will be available to FinVault, or are you developing your own tech as well? And the developers that you're bringing on board, are they specialized blockchain developers, and how do you go about simplifying it?
Yeah, absolutely. So the way we've realized that there's a lot of benefits in this Web3 world, but it's so incredibly complex to use. What we've done instead is we've built a platform that kind of bridges the gap between this traditional and this Web3 world, and makes it, we call it internally one-click DeFi. What we mean by one-click DeFi is that you literally go from your bank account directly to whichever Web3 platform you want to use by the click of a button.
Okay.
And behind the scenes, how that works is there's lots of smart contracts and lots of money movement that happens behind the scenes that you would have otherwise been doing manually yourself, but we've just automated all of it using smart contracts. And various, like APIs and money movement protocols. We have a very talented team of blockchain developers, both in Dubai and in Nigeria, and they've spent a lot of time kind of creating these automations that make it very easy from a UI UX perspective for somebody to go directly from kind of like a bank account to a Web3 protocol.
Okay, and so Christian, can you just explain DeFi? Is it decentralized finance, and what is that exactly?
Yeah, sure. So we have traditional finance, which is depositing and lending in traditional bank accounts. Decentralized finance, you can think about it as being exactly the same. It still does all of those things that we're used to when interacting with our existing financial institutions. So you can receive money, you can send money, you can borrow money, you can lend money, but instead of like one specific financial institution doing this for you, that is like in one country, in one jurisdiction, centralized, governed by the laws of that country. Instead, these things are operated on the internet, and you could arguably say jurisdictionless. They operate on the premises of programs and algorithms and code. Now, and because of this, because they operate on the premises of code and programs and so on and so forth, they operate by the rules of these algorithms, and what we say in the blockchain world is that code is law. Very much so right now. Even the legal profession is actively exploring smart contracts as a basis of encodifying various legal constructs. And because there's a lot of benefits to looking at effectively putting laws and regulations in smart contracts that cannot be modified. And a smart contract is sounds like something that's complicated, but effectively what it is if A, B, and C happens, then the outcome is D, you know? And there's no person in the middle of that can influence the decision of D. You know, there's no gray area there.
Yeah.
So by following the logic of this smart contract, the outcome will always be D if A, B, and C happen.
Fintech crypto world, and particularly around competitors and, you know, wallets and apps and companies that people might be familiar with. You know, last year Coinbase listed publicly, and they have a wallet. You mentioned your partner was in Bahrain. There's a company there called Rain, and there's a few others like that. How, you know, yes, they might be doing different things now, but what we've seen already with some of these trading platforms, because they've listed and because they've raised a lot of money and they might have their own coin, they seem to be able to move with the trends, such as opening NFT places to exchange and different things like that. How do you view that? Is that something that, you know, if you come up with something fresh and new, do you think that these almost incumbents would be able to do what you're doing as well? Or are you just pursuing your own path?
Yeah, I mean, look, any technology can be replicated, right? You could take a Coinbase and copy it tomorrow. But what makes Coinbase what Coinbase is a function of the number of users that use Coinbase and the licenses that Coinbase has. And very similarly, what we have and what we've invested a tremendous amount of effort on is the licensing. A lot of, you know, these investors we've spoken to, they're like, you know what, the technology can be built, that's not a problem, but we value a lot of the licenses that you have. That's where a lot of the barriers of entry to doing something like this are. It's not the technology. The technology takes a couple of smart guys in a room and you know, and in sufficient time it can be built. Now, there is some secret sauce to the technology, and we're not, you know, we're not giving that up. But of course, the smartest guys, smartest developers would be able to figure it out. Now, we also believe that, you know, we're on our own path. We're developing something that's special. There's not many organizations out there that are kind of making crypto and DeFi accessible. Even the likes of Coinbase, you know, it is a crypto wallet. Even, you know, these exchanges are very difficult to use. You need to be kind of like a trader in order to use it. And they don't appeal to the everyday person that wants to enter the crypto world. You know, it's too complicated for people to understand what bids and asks are and what order books are and markets and limit orders. Similarly, it's very complicated for people to understand what all of these various coins are and the benefits or pitfalls or whatever it may be of all of them. So we want to take away all of that guesswork. We want to take away a lot of those risks that are inherent in a lot of those decisions and make it very, very easy for people to enter, exit, and link their existing bank accounts to this platform. So in Europe and the UK, if you have, like, I don't know, like an HSBC account, you could link your HSBC account to FinVault. And then you click a button, you say, convert £100 to whatever cryptocurrency is. And that's done, right? So it's as easy as that.
Wow.
You then, next to your, you can see your HSBC transactions on one side, and then next to it, you could see your crypto transactions and balances and so on and so forth. And we believe that that's very powerful. in addition to that, we're using what are called these DeFi lending protocols. And what they do is they're able to give you very high percentages of interest on your stablecoin deposits, which traditional organizations, financial services organizations, are not able to give because currently deposits in Europe get, I don't know, 0.5% interest. And if you hold euros, in some cases, it's negative interest that you're getting, as per the ECB. So we're able to use these DeFi protocols to give higher yields than are available in traditional banking. So we believe that's the whole offering is quite compelling for people to use.
Fascinating. It sounds like some of these things that, traditional banks should start embracing, and especially if they can, as you said, you look and feel like a bank, and offering interest like that and is a good place for people to hold their money as well. Other companies have tried bringing traditional banks and financial institutions onto the blockchain, like Ripple and companies like that. What's the status quo? Where are we with, we know we're early in crypto, or we know it's still a growing or emerging industry, but where are you with financial institutions advancing into modern finance and advancing into digital banks and crypto? Do you think they're making some efforts, or do you think that fundamentally they're not built for the blockchain and they're all going to, be disrupted?
Yeah, it's funny you say that, because just this morning, Commerzbank in Germany announced that they're exploring getting a crypto exchange license in Germany.
Oh, okay.
So we're seeing a very interesting trend. We're seeing that crypto companies are becoming banks, and banks are becoming crypto companies. That's the trend we're seeing. There isn't a single bank out there that is not experimenting with blockchain. For remittances, for trade finance, for trading, for settlement, for whatever it may be, every single bank on the market in every single country is experimenting with blockchain. If you take that one step further, governments are now experimenting with central bank digital currencies. So they're in the very near future, and it's not even the future because China has already announced the digital yuan, which is a central bank digital currency. It uses the technology of digital currencies like blockchain, like Bitcoin and Ethereum, the same underlying technology, but instead of it being issued by just random people on the internet, it's actually issued by the government of China. We're seeing similar efforts happening in the UK, in Europe, even in countries in this region. I've heard about Jordan and Palestine, even the UAE. There was a project by the central bank of the UAE that was experimenting with central bank digital currencies using IBM Hyperledger between the UAE and Saudi in order to perform very large transfers. I believe it was called Project Sabah, if I'm not mistaken. So we're seeing this global trend towards not only banks adopting crypto technology, but governments also adopting crypto technology. And in the very, very, very near future, I believe that our financial system will pivot to this blockchain world because of the benefits it has. Right now, private companies are issuing these stable coins. So like there's a company in the US called Circle, and they issue a stable coin called USDC. And then there's another organization called Tether, and they release a stable coin called USDT. A stable coin is a digital currency that is pegged 1-to-1 to the dollar. So one USDC is equal to $1. Now, of course, having money control in the hands of private individuals may not be, the rightest path. It would be better if we did move to a CDBC world, but at the same time have financial organizations more governed by these smart contracts, which are better and less cannot be manipulated, so on and so forth. So that's a global trend we're seeing right now.
Okay, interesting. So, I think, one of the promises, and you touched on it there about, other institutions having control, but one of the promises of crypto is that decentralized and everything's kind of governed by the blockchain. But in terms of the individual being better off in the future, in terms of, if we all manage to understand fintech and crypto as it plays out, previously, the banking institutions mightn't serve the customer well, but now we have, with crypto, there's a lot of gas fees, as you explained, there's a lot of steps, there's a lot of percentages that are going. Is something that FinVault can offer is that less costs and less gas fees for individuals, or are you reliant on the blockchain and the tokens being cheaper and being easier for people to use from a cost point of view?
Yeah, absolutely. So that's precisely what we do. We use very efficient and cheap methods of transfer. We're using something called Polygon network right now, which is a very cost-effective network for building our technology on. It's kind of like it's built on top of Ethereum, but it's cheaper in terms of its gas fees. We're talking about pennies to the dollar for every transaction we do. And in terms of the steps and the fees and all of that stuff, we're reducing the complexity. We're reducing the steps. The steps still happen, but they happen behind the scenes. You don't see those steps happening. But our technology does all of those manual steps behind the scenes. And all you see is, hey, I just went from my bank account to this DeFi protocol, whereas before I had to do 13 steps in between to go from A to B. Okay. Those steps still happen because they have to happen, because that's how it works, but it just happens automatically behind the scenes.
Okay, interesting. So without getting too technical, and I really want to ask about NFTs before we run out of time, but before we get there, can you just explain sort of Polygon and the layers, the layer 2 and now layer 0? What does that actually mean for the individual, and how are you applying those different layers and how you're building your product?
I think for the average individual, this is just noise and doesn't mean anything, right? So the average individual should not get concerned with it. But generally, like if you want to dig deeper into it and look into it, what it means is that a lot of blockchain technology, Bitcoin was kind of like the first blockchain technology that came out there, kind of like paved the road, but it had limited usefulness. It couldn't really be used for anything apart from maybe as a store of value and medium of exchange. But you couldn't build any kind of like financial solutions on top of Bitcoin, really. Along a few, like maybe a year later, something called Ethereum came about. And what Ethereum provided was this functionality to create these smart contracts. And the big thing about that was that they claimed that it was what they call Turing complete. What Turing complete means is that using their smart contract language, you can build fundamentally any single program you want. You can build a whole program, like anything you want that works and operates on the blockchain. Now Ethereum, because it became so successful because of these smart contracts, ended up being used by a lot of people. And by being used by a lot of people, the network became very congested over time. And becoming very congested over time, you had to pay more to get your transactions in the priority in order for your transactions to be executed on time. And eventually, at some point in time, it became like you need to pay, I don't know, like $50 every single time you want to get your transaction through, which obviously becomes very, very expensive. and even becomes more expensive than using a traditional bank account if you want to send money from person A to person B. Now, what then happened is that some very, very smart developers in India created Polygon. And what Polygon was is what they call a scaling solution. And there's Bitcoin, Ethereum is what they call layer 0, and layer 1 is Polygon, which is the scaling solution. And it uses the underlying Ethereum technology, but it's able to confirm transactions much faster and much cheaper. And because it's able to do that, it became immensely popular, immensely successful. And it's the technology that we use, that we've built our technology on top of, in order to benefit from the lower transactions and the faster transactions.
Fascinating. I feel more educated on the crypto world after listening to that. Thanks a lot, Christian. I hope the listeners appreciate it too. Before we finish, can you tell us how the Arabian Horses NFTs came about and how that was done on FinVault?
Yeah, absolutely. We're extremely excited about that. The Al Sheikh Stud Farm partnership. In this region, people love Arabian horses. It's racing them and their immense beauty. And we've partnered with the stud farm in order to create a collection of these NFTs. What NFTs are basically, you can take, it's like a digital representation of an object, be it an art. So right now you're getting a lot of people buying and selling NFT art. It's like digital art on the blockchain. And what makes it unique is that each NFT can only be created once. It's a unique element. It's like buying a Picasso that was only created one Picasso is only created, so it's very similar to that. They have an element of scarcity to them. So what we're doing is we're taking all the Arabian horses that exist in this stud farm, and we're putting them on the blockchain through these NFTs.
Well, I said to Christian that I learned a lot on that podcast, and I certainly did. It was amazing to hear things explained. Some I understood, some I still need to do a bit more learning on, but it's fascinating space, fascinating world, and I think we can all learn from it and embrace it. And it's interesting what Christian and his co-founder are doing with FinVault. And one of the first places you can check them out is the Arabian Horses NFTs that we covered on Smashy Crypto earlier in the week, and Hala and her team covered it on the Smashy TV app. You get regular crypto shows. At the moment, our crypto shows in Arabic, but the Smashy Crypto Instagram account and TikTok page do the daily news in this space in the region. So I suggest you check them out if you want to learn a bit more. And for the podcast, if you are listening on any audio app, we've had a few issues with Apple of late, but we will be bringing them back up on Apple soon. But we're available on Spotify, Angami, Podio, SoundCloud, and all the others. I want to thank Alibaba, who's been covering a one-man show this week on producing, editing, and putting everything together, because Shahir, our other producer, has been off unwell for the week, but inshallah we'll have him back next week. And yeah, so next week will be our last episode of the month, our last episode during Ramadan, but we will be broadcasting live next week 11 a.m. on Friday, and the week after the Eid break, so looking forward to chatting then.